Good morning, everybody, and welcome to another one of the WealthTech talks from the Wealth Mosaic, the final one of 2021. And suitably, I am joined by three guests today, and we are going to talk through what we've seen in 2021 in terms of technology, wealth management, wealth tech, and interestingly, we're going to talk through what we expect to see in 2022. So welcome to Christine, Mark, and Ian. I will ask them quickly to introduce themselves shortly. So we're going to talk to you for roughly an hour. For those listening in, you can ask questions. There is a facility to put questions through. Otherwise, the session is recorded and will be available to listen into again and for review a couple of hours after the live session. So as mentioned, the focus is really on all of the main trends and themes that we've seen in and around wealth management and technology and wealth management over the last year and looking forward. So we're going to look through a little bit of the developments, the focus areas, the trends, the needs, and then give a little bit on sort of action points and concluding points where we think the market's going and what that means for everybody in the industry. So I will ask each of the panelists to introduce themselves. So Christine, if I can start with you, a quick introduction to who you are, what you do, and perhaps an opening statement on the topic.
Thanks a lot, Stephen. My name is Christine Schmid. I joined Additiv 2 years ago, was a member of their EXP. I'm heading strategy. Additiv is a wealth tech provider globally, ex the US. It's an important distinction. So I spent all my financial career within markets, investments, and clients. That's what I'm passionate about. Used to run research organization for large banks or change investment, what's called investment solutions departments, towards a more digital access style. So wealth management, and that's the beauty of it. It's a growth market, and we believe that we are just at the beginning of the business model transformation, which is largely driven by the opportunities of what is called embedded finance or even embedded wealth. It opens up new use cases on the wealth side. But we have seen the big shift already on the payment or even on the lending side with buy now or pay later. This is more advanced, we believe, than the embedded wealth is just starting to pick up, which is an excited part of being part of the wealth tech industry right now.
Fantastic, thank you, Christine. Mark, if I could come to you next, please, for a quick intro to yourself and an opening statement.
Yeah, absolutely. Well, nice to be with you today. I'm Mark Trousdale, InvestCloud's global CMO and our head of business development for EMEA. I'm part of the founding team, so it's my 10th year with InvestCloud. Despite the accent, I actually live in London, and InvestCloud is a digital transformation company at its core. We provide a single cloud platform for digital wealth, which I know we're going to talk about today. And we also offer what we call a digital financial supermarket. We're very focused on wealth and asset managers, I think like everybody here today, and their clients. And in terms of market presence, we have client deployments in over 40 countries globally, and 6.3 trillion of assets runs through our platform every day. In terms of the main themes we've seen in wealth management focus this past year, and indeed we see these continuing to evolve going into the next year, it's where the gaps lie, to be honest with you. And a lot of these gaps, while basic, and we seem to continue to see persisting, and those are around communication, planning, and shopping, all in the digital context. And so, you know, how wealth managers service their clients, plan for the future of their clients, make decisions and fulfill those decisions, i.e. the shopping part. There's a lot of friction, there's a lot of pain, there's a lot of lacking efficiency. And so, you know, for our part, that's why we've structured our solutions around these themes, but those are the main ones. They may not be the most mind-blowing, but they are, that we do see them continue to persist.
Super, thank you, Mark. And Ian, over to you finally, please. A quick intro to yourself and your role.
Yeah, sure. So I'm Ian Woodhouse. I'm with Accenture, where I'm the lead wealth management transformation and thought leader for Europe. I've got a good understanding of the private banking and wealth management business and technology and experience of supporting a range of different private banks and wealth managers to successfully drive their growth, to raise the value, and to help them implement change successfully. So what do we see as being the big market developments? Well, I would say overall it's been a good year, but it's been very unpredictable and it's very volatile. So private banks and wealth managers are having to be much more dynamic than in the past. They have to anticipate and manage this idea of constant change faster than ever before. It's probably true to say that most of the private banks and wealth managers who are our clients have experienced probably a year's worth of change in a matter of months. And so this has shifted their focus and ability to change. And there's been a race to remote working with clients. What we're also seeing is a little bit of a shift. Most of the investments last year were primarily tactical as they moved towards remote working, digital signatures, streamlining the digital interface, as it were. But what we're noticing now is a shift towards more strategic investments in IT to address some of the legacy issues, as many or several of our clients found they struggled to cope with the volumes last year or this year. And also there's the fact that they couldn't predict the rise of new client behaviors. So for example, the GameStop crowd, as it were, and also there are a large number of clients who are new to wealth because they can't spend their money anywhere else at the moment because of the sort of lockdown. And I think the last thing to probably finish on, I think most wealth managers have suddenly realized the importance or the growing importance of technology to their business in the future, in the sense they need to be more flexible and scalable.
Thank you all. And I think, well, a good point to finish that introduction on, Ian. I think, as you mentioned, volatility, tactical versus strategic. Mark said there's sort of three key areas that the industry has to focus on that maybe aren't mind-blowing, but are there, and maybe they've been there for a long time. And then, I think coming to Christine's point, we're at the beginning of a journey, and we're behind other industries. So, Christine, if I can come back to you, if you look back over last year or this year gone, what have been the things that have noticeably stood out for you in terms of trends around technology adoption, application, need in the wealth industry? Have there been clear evidence of highlight issues?
Thanks a lot, Stephen. And I think coming back to what was said before, yes, the investments have become more strategic. Before it was kind of in a rush to solve tactical issues, certainly become more strategic, and therefore it requires as well a mindset change. Mindset change that it's I would call it the not invented here syndrome, that you partner and solve it with partners. The clear focus on the wealth manager side is for client experience, serving the client right. And therefore, one of the biggest trends still there is the next generation, the wealth shift. This is continue to happening. I completely agree with what was said before. It is not mind-blowing. It's not new. Wealth management is something that's here for decades or even centuries and will drive slowly forward, but it's like a force. So certainly wealth transfer was a big one. Then inequality has risen, Stephen. Thus financial planning, not only for the rich, but also for the ones that struggle to get the 3 months savings aside before they buy now, pay later again, and the gap gets bigger. This demand has picked up tremendously. Then everything that has to do with ESG, SDG, no matter what the final definition of it will be, but certainly moving into the right direction and providing solutions and transparency. It's again back to client experience, transparency, guidance for the clients, but also for the advisors. It's always both sides if you're in a hybrid model, has picked up. And last but not least, please, I'm a minority in this call again, but females and female investing, it's a big topic. I know Switzerland is a small country, but the biggest pension gaps are on the female side. It's historically grown the way it is because of the work participation, but there is more to be done. And certainly this as well will be not only a topic of my heart, but also an area where wealth managers can focus on, have started to focus on in 21, and will continue to focus on, in my view.
Thank you, Christine. Mark, I mean, these are massive topics in their own right, each of the things that Christine has mentioned and that actually yourself and Ian referenced earlier. So I don't know whether you want to pick up on any of those particular topics and or expand on them in terms of what you've seen in 2021 and what it means for the industry.
Yeah, I mean, I completely agree. These are critical topics. I mean, I think to pick out a couple, this client experience imperative, which I could not agree more with, is a facet of what I'm referring to in terms of communication and planning. I mean, it is this is a trust-based business, whether you're a private bank or a different kind of wealth manager. However you're regulated in whatever country you operate in, this is fundamentally about trust and stewardship and communicating well and ensuring that your clients feel heard and that the solutions you reflect back are apropos. And also in terms of female, participation in investing, and I think you can look at a few areas of underrepresentation, even if you look kind of more broadly at financial literacy amongst populaces, regardless of gender. There is a lot of lack of inclusion that happens, and part of it's because of the jargon that industries use, including our industry, and it also has other causes as well. And I think if you're thinking about solid, excellent, apropos, empathetic client experiences and client communications, and you're also focused on greater inclusion, one of the ways to solve for those that we've talked to a lot of companies about, is using behavioral science. And the reason that I say that is because behavioral science is fundamentally about human psychology applied to investing processes and decision-making processes and client engagement processes. And if we look at confidence, males tend to be overconfident in decision making. Females tend to be underconfident, and females can actually make better decisions often in the investing cycle. And so I think if we're sensitive to and study and actually are deliberate about reacting to human psychology, it will not only make sure that there's more inclusion, or it can at least help us get to better inclusion in the process, but equally more broadly, I believe, and we believe indeed, that it will help with client experience, because the more you know your client, we all say know your client, right? But know your client is not just an anti-money laundering, risk mitigation exercise. It's really knowing your client, and knowing your client as an individual human being, and what their biases are, their hidden biases, their overt biases, how they process information, how they need framing for a decision. I think these are all strong arguments to leverage more behavioral science in what we do.
Fantastic. Ian, there's a lot going on there, and just picking up on Mark's point about understanding your clients from not just a compliance perspective. You've talked about new client types, particularly because of COVID, but just generationally and through technology. Does the industry understand its clients, and therefore can it move forward on a basis of, well, it knows who it's servicing and therefore what it should give to them?
Yes, I would say certainly. The real challenge, I think, going forward is there's so much change happening concurrently. So you have business changes, you have the client changes, which we just talked about. You've also got technology changes, and I think in terms of behavior, I think also that's very important. I think also expectations of what these new clients want is generally quite different from what the private banks and wealth managers have been used to delivering in the past. These clients may be more au fait with things like social media. They may be more into networking. There is definitely, as Christine said, the rise of women investors. There is this rapid evolution of environmental and social trends, which again was mentioned. And then to cap it all, you know, the traditional asset allocation is shifting quite significantly. So not only will you have ESG in the portfolio, but you could well have private assets, you could have digital assets becoming increasingly important. So it's a perfect storm. You know, the traditional ways of working for most private banks and wealth managers is changing on the business side, but also on the technology side. Now, what we're seeing is quite interesting. In the past, most people used to look at managing the bank going forward in terms of technology, in terms of running the bank and changing the bank. That's now changed. Most people now look at it as continuous change at pace model. This is quite different than in the past. And what this means is they're having to introduce newer, more agile ways of working. There's less waterfall approaches. There's more what I would call the construction of minimal value, the minimum viable propositions. And, you know, the pace of implementation is gone up quite considerably. It's most likely that the private banks and wealth managers will be implementing things in short bursts, like 5 to 9 month cycles, as opposed to doing big technology programs that go over many years. So these are quite I mean, I think it was mentioned earlier, this is a big mindset change, but it's also a big capabilities and skills change as well. And so, you know, again, it was mentioned earlier, what we're seeing is more and more private banks and wealth managers going outside to work with partners to help them with this shift, because not only is it a change, but it's also, in some senses, it's a time-constrained change, because with ESG, you know, we've got a decade to deliver. That's not a long period of time.
Thank you, Ian. Christine, I want to pick up on two aspects of that, if possible. One is the sort of needs versus expectations. So, as an example, we all need to eat, but how we buy food in the new world, particularly because of COVID, has perhaps changed radically. I know living in London, there's all sorts of crazy mechanisms to buy food on demand now, which just didn't exist a few years ago, and that's probably an interesting dynamic for the wealth space. So, needs versus expectations, and two, this changing mindset, changing culture, moving to rapid or continuous change, as Ian mentions. Can you pick up on elements of that and give us your view?
I think the needs versus expectations is a very good example. Literally, we would all have had the need to invest, given how the markets have moved and how low interest rates were on cash accounts, on bank accounts. Nevertheless, a big part of the client base remained outside of the investment space. So it's the need to invest, and we all know it, and our clients know it, but it's the expectation never to lose one Swiss franc, sterling, euro, US dollar. So, and I think one point I would love to add to the discussion before is really the geopolitical changes that's happening. Not only are we in new asset allocations, so yes, digital assets are on the skyline or already in part of our portfolios, so hot wallets. Alternative investments are there, and the entry level into alternative investments have fallen. So the asset allocation has changed. Now there is a new beast on the horizon, which is uncertainty, which is certain volatility or geopolitical tension and risk. And with it comes the fear of inflation. It certainly might stick around, given that we have a new wave of COVID, might stick around for 22. And then the big question mark is what's happening in 23. Even if it remains at healthy levels around 2%, it's different than before. So yes, there is a need to invest. And there needs as well to be education. Financial literacy was mentioned by Mark before, fully agreed. Financial literacy, the impact of long-term investing is super, super crucial. Financial planning is about long-term investing. It's not about day trading. It's about long-term investing. It's about the effect of the market can have over the next 25, 30, maybe even 40 years to your portfolio. So it's about content, it's about education, it's about constant hand-holding of the clients. So if they're even not yet aware of the full needs, but they are aware of the expectations, behavioral finance certainly helps. And we as well put that into place to help and steer through but it is always difficult to offset one's fears. In terms of the mindset change, I think the mindset change is tricky to fulfill, in particular if you run a large organization that's maybe on the wrong skill set. So it needs a change in incentives first. Then it needs a lot of education as well on the bank side. And I think coming back to SDG, we should revisit the way we celebrate. And I was a banks analyst for so many years. We celebrate cost savings, Cost savings, banks, cost savings is predominantly staff. And maybe you have staff currently that needs more than an education, a change in process for the next 10 or even 20 years of their jobs. So I think it goes deeper. The mindset change goes deeper into as well the way we should model success on a company side, because we have an enormous shortage out there in terms of skilled IT workers, and we will not make it without education on that side as well.
Mark, what does that mean for selling technology or using technology? Because these are themes that perhaps go well beyond programming and technological toolkit.
Yeah, I mean, I think in terms of the mindset, certainly we've been big proponents of this notion of digital journey, absolutely continuous change, digital transformation. These are, and I think the industry, is moving away from, if I just did X, Y, Z, I could get there, to that there are many changes that need to happen over time. The world will continue to evolve, whether it's macroeconomic considerations like inflation, or whether it's what's happening with the pandemic, or whatever it may be. And so I think I believe the industry is coming along more than maybe they were, at a place. They're in a different place than they were 5 or 10 years ago. And so part of it absolutely is that acceptance, and indeed, once you've shifted a bit your paradigm, as a buying firm, as a wealth firm that's looking to partner, I think the stress is taken out of the not only the project decision, but also how you look at your entire program, because it's not this. I've seen firms be a little deer in headlights. What do I do first? It's so overwhelming, and you try to kind of boil the ocean. But I think firms are moving away from that, and I think that's a healthy shift, because this is about continuous change. Absolutely agree that it's about more rapid cycles. We've always focused on 3 to 9 month cycles of value delivery, and I think that that's the right amount of time, because otherwise it's just the world's moved on. By the time you've completed something as a firm. I think in terms of how selling technology, I mean, we've never viewed our technology delivery as a transactional relationship, and so if it's not about selling something and getting money for it, and it's about something bigger, then what is it about? And for us, it's about value delivery, and value delivery means looking at key performance indicators, whatever they may be. And I completely agree with Christine. Traditionally, especially for banks, this has been a lot around cost reduction, cost to income ratio. But equally, the conversation with both banks and non-bank wealth managers has been shifting to, I guess, what I could call more client retention and growth focused metrics to complement operational efficiency metrics. So things like higher NPS scores, coming back to the client experience, right? Faster AUM growth, less attrition, right? Less churn amongst clients, higher profit per client, which doesn't mean having to necessarily, cut jobs. It means getting more out of the base of people and clientele, basically, than you otherwise could before using technology. And frankly, when wealth is done well, we're not talking about hawking things to clients they don't need. We're talking about figuring out a future with certain objectives and goals, even if those be complex goals like tax and trust and planning and cash flow goals, or lifestyle goals, or philanthropic goals, and then fulfilling those goals with investment choices. And so I think the the mindset is shifting. I think that's a positive thing for us. And also the more that we can collectively focus on particular needle moving outcomes, the better it is for the buyer. And frankly, I think for me as a service provider, the more fulfilling it is for me personally, and I'm sure for Christine and Ian, we want, just as wealth managers want real outcomes for their clients, I want real outcomes for my clients.
Ian, I have a question for you, but as there's so much going into this discussion, I wonder whether you wanted to pick up on anything specific rather than me pinpoint something.
Well, I think the mindset issue is an important one because, as we all know, it's quite hard to change mindsets. And we're probably talking about mindsets in the clients themselves, but also mindsets in the private banks and wealth managers. I mean, I think it's an evolution of mindset because we've gone from a period where most private banks and wealth managers had to stabilize the business in the light of the COVID situation. And then they've had to build new foundations, and then they've had to advance in certain capabilities. And if you go forward, there's going to be more and more of these capabilities, both business and technology, as we mentioned before, because these things are changing in parallel, and it's all about this journey of mindset change. And it's going to be a faster journey, which is going to be more unpredictable. And you're going to have to change the mindset if you're going to be future ready, for next year and beyond. I think that's the first thing I would say. And then I think also private banks and wealth managers have tended not to be particularly dynamic. I mean, it's a tradition of conservatism and evolution, and now they're having to move more rapidly because of the uncertainties and the volatility in the markets and so on and so forth. So what you're starting to see is a more modular approach, I think, in technology. So different combinations of modules can be combined in different ways to get that flexibility out. And I think what you're also seeing is a pick up on another point, which is the growth of ecosystems. I mean, now you've got more private equity, you've got more venture capital, you've got fintechs, you've got the software providers, you've got the business technology integrators, you've also got product providers. So, there's much greater trend towards ecosystems, which are themselves enabled by the new technology. And the last thing, as I wanted to pick up on a point that was made earlier by Christine, which is we are moving in these ecosystems towards a broader set of services, that increasingly wealth will be combined with things like healthcare probably and other things. And this is I think this trend towards embedded finance is probably in the early stages. Now, I would say it's difficult to know where we are in terms of progress, but I doubt whether, in my view, and I'm happy to be corrected, I doubt whether a fifth of the industry or 20% of the industry is moving sufficiently fast to meet these trends. So that means there's 80% out there that still need to shift, and that's going to be the challenge going forward. But the 20% is my view, and I'd be interested to get other people's views on that.
Let's open it up. Christine, Mark, what's your view?
Yeah, if I might add up on that, I think they're picking up fast, either by themselves trying to become rather more a platform model, and it's fantastic because technology is really enabling what we have in front of us here. It's the APIs, it's the cloud, it's the microservices. The technology is there. I would say the big ones have realized what the opportunity is. They're looking for ways to partner. They're building themselves, and I think the best example is Goldman Sachs. It's coming out of the US. Europe might be a bit slower, but if you look at the strategy day 2020 of Goldman Sachs, can highly recommend it. This is what we are right now discussing. Okay, so yes, but it needs a complete mindset change. It needs a different underlying combination of teams and skills. It needs engineers. It needs maybe less front people. It needs definitely more engineers. What has or who has picked up it very fast is everybody outside of the wealth management world, by the way. You mentioned health insurance, life insurance, even the retailers or the large super apps, they've picked it up. They see the opportunities. So if you can provide end-to-end services, and there where the banks come into play again, because one part of the embedded finance equation is banking as a service. So they're part of that journey, and they have the opportunity to team up and leverage their offerings in a simple, transparent way into completely new channels, into completely new value propositions that weren't there before. So if I might, one last sentence on the example of health insurance. Large part of the wealthy population in Europe is privately insured. And you normally can afford that if you're young. But if you're getting towards more elderly age, your private insurance in terms of pricing goes through the roof. And therefore, there are options that you kind of save for that in your early years. And that's a typical wealth management adoption, to use it when you normally have a bit more problems on the health side. So health and wealth, how we call it, or financial well-being, these are really value propositions that are picking up super fast as we speak.
Right. Mark, do you want to pick up on some of that too?
Sure. Yeah. I mean, I would say, I think I agree with Christine, and perhaps also even what Ian's saying, that there's a strong desire out there. Which I would argue is far above 20%, but I think there's also this broad sort of don't know how to do it, and which is fair. I mean, if you think about core and context of businesses, wealth managers should be really, really, really excellent at wealth management. And if they're not really, 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 really excellent at doing tech by themselves, I'm not shocked. In fact, I'd argue that's probably a good, division of speciality, and why there are other experts to partner with. To give an example of one of the impediments to moving forward. So, there's this quote that's been attributed to Mark Twain and about, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. And so there's stories out there in the industry that are not true, and there are stories that are unhelpful, and so it's one of the stories that I see amongst wealth managers and private banks is, I've got to change my back end in order to change my front end, whether the front end is a client portal, or whether it's a client lifecycle management solution, or whether it's the tool that the advisors and the RMs use or planning. And that is just a fallacy. It's just not true. It just ain't true. And when you've got this high desire, right, to transform, which I agree is not 100% pervasive, but when you've got this high desire and you don't know where to start, or you feel like you have to do something really messy and difficult, like change a back end, a core banking system, or a portfolio accounting as the only way to move forward on a front end, that's not helpful. And sometimes we, certainly a lot of our prospective firms that we talk to have gotten into this pickle where they feel stuck. And so I think there's a difference between sort of the expectation desire level in the industry, which could still be higher, but the is high, and the know how to do it sort of level, or gonna do it level, and it has some to do with these kinds of stories. I mean, one thing that I think we need to grapple with as an industry is technology debt, right? These are not, even if they're smaller wealth managers, you don't need to be a global bank to suffer from this. You've got kit. You've made your bed with certain decisions around build, buy, partner firms, data providers, etc. And that's fine. That's normal, right? And I think, similar to the I got to change my back end to change my front end fallacy, I think there's also I've got to upgrade everything to have success, or move the needle, or move incrementally forward, or make my clients happier, retain my clients better. And, we believe that if, at InvestCloud, if you have something that works, try to make the most of it. We've gone with a modular approach because we didn't want to create total disruption. And I think if you're looking at anything, most things in life as an all or nothing proposition, sometimes it can be daunting. And for me, I attribute some of the maybe lacking additional progress that could be there, which, Ewan speaking to, partly to maybe asking the wrong questions or having the wrong stories about what is possible.
Let me add one point to that. Completely agree with what you said. I would add within the wealth managers the organizational limitations to it, i.e., who can decide? Who has the responsibility to decide? And limited to that, on top of that, I would say even the today's existing revenue pools. There's still a lot of revenue power around, and therefore the decision really to go maybe into something that could be cannibalizing. It's not only the limitations that you have, that your backend might be slow. This you can solve. You can build on your backend with an orchestration layer and drive it forward. That's all doable. It is more about organizational limitations, the decision power, and today's revenue pools.
Ian, I
Sorry,
think
Ian.
All good. So Ian, I think the cultural shift the mindset shift is the big one almost, isn't it? Because everything else seems to be there, it's available, it's possible, it's doable, but firms are in a spin, they don't know where to start, they feel it's too big, they feel maybe people have got the wrong skills. Christine's point about maybe less people on the front and more engineers, I mean, I can imagine that would go down like a lead balloon in a lot of wealth management firms where it's been advisor-led. So if that's the journey, how do they start? What are the tools and mechanisms to make those changes?
Well, I think obviously it varies by each individual private bank and wealth managers, and I do think we're starting to see a little bit of a shift in the C-suite. So we're starting to see more visionary leaders, the next generation of C-suite executives coming in, and I think this generation is the generation which has grown up with the new technologies. So, if you think about it, some of the new technologies are relatively recent. You're talking about, I think the iPhone is probably 11 or 12 years old, stuff like that. So I think that's the first thing. So I think that's good. Now, where do you start? Well, I think the most important learning point from the pandemic is you should start with the clients, because either you've got a traditional client base, which is probably roughly over 60, traditional wealth, maybe older, or you have some younger generations. This is the intergenerational transfer that was mentioned before. Now, the issue is that those two broad cohorts are changing. So I think it's very important to start with the client and the client base, and to make sure you are evolving the client base in line with the dynamics and the age profile of your existing clients. Then I think the second thing is to get more informed about new technologies. Now I think there are three big technologies that are going to become or are becoming increasingly more important. The first one, as we've mentioned before, I think is cloud. I think the second is data, because data is in some ways the new oil as we go forward. And then the third one is artificial intelligence and machine learning. And I think, increasingly those three things will combine. As Julie, who is our CEO, says, the best way to think about it is cloud is the enabler, data is the driver, and AI is the differentiator going forward. So I think that's, the starting point should be a combination of the business with the clients and the client's expectations, the client behavior, as we mentioned before, but also it's an awareness and understanding of what these new technologies can bring, and they will become progressively more important as we go forward.
Magical mute button. Mark, client experience, engagement with the client, understanding who the clients are and what they want, I still think is a weakness when I look across this industry. I mean, I spoke to one of the big global firms recently, and it was not broadly across their business, but it was with regard to a particular project, and the client wasn't engaged until the last minute, which I was very surprised about given who that firm was. I thought it would be the other way around. Is the industry really thinking and looking and understanding its clients as it should be in order to move forward, as Ian said?
I think it's struggling to do it digitally. You know, I do believe that most great wealth managers do actually focus on traditional relationship details, like whether it's, you know, birthday or spouse, partner, children, you know, life goals, attitude to risk, you know, all the things that you've just got to do wealth management. However, I think the industry has still been broadly struggling to understand digitally, and because it's not necessarily obvious, and the way that people process information is not the same as how people engage in conversation, for example, and the way that people sort of vote with their time by how they use their time on a screen, for example, in a client portal, is not the exact same to how they have a conversation either. So I think, you know, a lot of wealth managers have struggled with how do I measure that? How do I understand it? And to your point, you know, that can lead to a risk of doing something a bit in a vacuum or a silo, and then ta-da, right, you know, to the clients, and who knows if there's going to be take up or not, which is similar to the sin of, you know, if you look at kind of classic system development life cycles of like the Big Bang approach. Nobody talks about Big Bang anymore because it's a terrible idea, but people did talk about Big Bang as a legitimate option 15 years ago for sure in this industry. And so I think there's a difference between really knowing the client as a human and even some of their investment preferences and goals and life goals, and knowing them as a digital participant, as a digital user. And so you know, yes, I think the industry still struggles to be able to get to the place where there can be a bringing along of clients, as Ian said. I mean, I do, you know, picking up on those three technology, you know, drivers or enablers, or, you know, enabler driver differentiators that Ian mentioned. I mean, absolutely, cloud having sort of omnipresence, if you like, for your clientele, even when we can't be together, even when you can't have a phone call or an in-person chat, as the world, you know, as the last 2 years have shown us, is a big part of a step in the right direction. And some firms had still not done that. You know, most of them have moved forward given the imperatives of the world. I think having a single source of truth in terms of data is absolutely critical. It enables at least a client experience and an advisor / RM or banker experience to be, you know, driven from the same source. So at least there's not confusion. But yeah, AI is a way to perhaps cut through a little bit. I mean, we've always used AI for generating code for our platform, but also equally for client portfolio suggestions. So we use it to make RMs better, bankers, advisors better at what they do. And part of that's looking at client behaviors automatically without relying on a human to do that analysis. Part of it's looking through large reams of research and then bringing the two together to come up with next best actions. And so I think there's an element of, it's two things. It's mindset shift again, which, you know, a lot of this, you know, is human driven. A lot of it's, you know, we go back to basics. So we need to be able to ask the right digital questions of our clients. But I think equally there's a place for technologies like AI to make it so that the human doesn't have to divine what their clients always want in a digital. They can observe the behavior and draw inferences from the behavior, and that will help, I think, bridge us along as well.
Christine, on Ian's three pillars, the enablers, these differentiators, do you have a view on maybe where the industry is, whether there are other pillars? Mark just talked of some of the utilization of AI and how powerful it can be if used correctly. Where is the industry? You know, are those the right ones? Are there other things happening from your perspective?
I completely agree with what Ian and Mark has said in terms of cloud as an enabler, the importance of data, and in particular analytics on the data side, but also in an ecosystem to team up data beyond obviously beyond its own bank. The driver for the next best trade or the personalized advice, how it's called, alongside a very traditional risk return pattern to optimize the portfolios, because normally portfolios are quite way off an optimal pattern, a big time off an optimal pattern. So there is a long way to go. You could even reduce risk while enhancing return. That's a nice pattern, I would say. Deep diving into that, I would add a fourth technology driver, which is blockchain. So the way to store your assets, the way to trade your assets, the combination of digital assets doesn't need to be only crypto, but crypto is one of the bigger ones, the digital asset combination with what today is stored traditionally as financial asset side. And honestly, I think we are at the brink of seeing coming these two together into a holistic wealth pattern. This is certainly something we look into and work towards as well for our clients. So yes, not fully regulated, highly volatile, nevertheless an increasing source of wealth and storage of wealth, which will not only affect the whole operation layer, how banks are run, and all of them, and I think they're nicely advanced, all of them are testing around of first areas of trading, with new custody players, the Swiss Digital Exchange, Singaporean Digital Exchange, they're on the go there. And technology will help to bring that into one holistic financial planning view and to drive it from there. So I would add blockchain to that. And I haven't made up my mind completely, but the metaverse seems to pick up. So if we discuss wealth, it reminds me at the days at university where all this vision about internet, what internet could bring to us, it's quite some time ago. Metaverse seems a bit the same there. So certainly worthwhile looking into that, what the drivers are, how to position there. You see the early ones, the gaming industry, the consumer industry, like the Nikes entering into that. Banks still sitting aside, but I think where wealth is, where money transfer is, wealth and banks are not far away. So if I add these 2 points.
Metaverse to come up in this conversation, but all good. It sounds like we need to look at that in the future, or the near future, 2022 indeed. Ian, blockchain, where there's a lot going on clearly from this conversation. I mean, is the industry ready for blockchain? Is it looking at it? Where does it think it can make hay? And is that something that's here and now, or is it sort of it's a few years down the line?
Well, I think it's both sort of here and now and a few years down the line. So, as Christine mentioned, I mean, there's a lot of blockchain going on with the various exchanges, and we're part of that transformation at the moment, be that in the US, be that in Europe, or be that in the Far East. So I think there's a lot going on with the exchanges. There's also a lot of evolution around blockchain in terms of things like tokenization could be very important going forward, because if you go back to what we said earlier about the evolution of asset classes, you could, with tokenization, start to make assets that are non-traditionally tradable. That opens up new revenue streams. So I think there's a lot to this. I think the regulations around individuals versus experienced investors versus non-experienced investors might take a little time to play out, but I mean, yes, it's the direction of travel. It's going to become more important, and it will open up new revenue streams for I think private banks and wealth managers. So people are looking at it, I would say, early stages. You have some banks who offer it, but generally it's something that will become progressively more important as we move forward in the next 10 years.
Yeah. Mark, I don't know whether you want to pick up on metaverse or blockchain, or whether you have any views on that, or maybe some other far-flung thing that's really going to be relevant next year.
Yeah, I mean, look, I think I think when it comes to blockchain and digital assets inclusive of digital currencies, cryptocurrencies, have provided a diversifying opportunity for portfolios, which Christine mentioned, earlier in the conversation. you know, a broader asset allocation if you like. I think some people are doing that for opportunity's sake, as with all investments, you know, seeing things going up, even if they're highly volatile. And some people are doing that because they believe in the infrastructure that some of these
just gone silence, is it?
You know, for you know, building out the broader network that will be required for some, you know, decentralized finance. But again, I do come back to say, you know, truly believing that while a lot of these next generation or current generation broader adoption type things are on the rise, there are some basics that just need to be done better. And as you know, as you said, Stephen, you know, there's a lot of dissatisfaction with client experiences. Client experience is something we've all four of us have talked about a lot. You know, doing that better is more fundamental than adopting digital assets, and we still have a ways to go as an industry. So, you know, I guess, you know, not to be the boring one here, but you know, the next year, I think we'll see there bigger investments in some of those sort of fundamental areas where that the wealth management relies upon, whether it be knowing your client and talking to your client well, planning for the future, or fulfilling that, whether it's with digital assets or not. And the industry is still struggling a lot.
Yep. We have actually just shy of 10 minutes left, so I want to ask each of you very shortly sort of your recommendations, what firms need to do in 2022. But Christine, one thing that just popped into my head, with all of this stuff going on now, throwing in the metaverse and blockchain and digital assets and tokenization and cultural change, right? Is the industry at risk of grinding to a halt because there's just too much happening? If it doesn't even understand its clients now, you know, and they're traditional relatively, you know, is the industry at risk of just stopping because it has too much to take on and can't possibly manage all of that? Or is that just me being overly negative when I should be much more positive?
I think you're leaning to the too negative side, honestly. The industry was always able to cope with if the pressure was there, and there are solutions out there to do that, as Mark and Ian have laid out. So for 22, it is certainly becoming more client-centric. Differentiate between, have the logic in the middle layer and play around with your front ends. It's more about design, it's more about fun, it's the ease of use, it's the transparency. If you would only sell as a car manufacturer now the battery underneath, and do not put emphasis on the design, what you put around the battery might be tricky. So yes, it's about guiding client experience, guiding the clients on financial planning, helping them to achieve the 3-month safety cushion, but in a stylisher way to do it. So design matters a lot, and therefore don't build it in the front end, use it in an orchestration layer in the middle, maybe build it on your existing backends, and guess what? You serve your clients better. For 22, my big belief is we will see more on the SDG, Sustainable Development Goals side, so impact investing. We move from ESG more towards really having an impact. Clients want to be involved there. This is certainly a big topic. Females are a bit more prone to that, if I might add that one more time, but I think there is a bias to this. And banks, therefore, are transforming themselves more into platforms, looking at ways to benefit from what technology enables them and what the changes are. So I think if they really have to decide, they will take the decision, hopefully, to move into the right directions. But at the same time, competition from outside the wealth industry will arise more. So they have to speed up, and speed really, really matters. And I think one quote we often refer to on our side is, you miss 100% of the shots you don't take. That's quoting Wayne Gretzky, and that's certainly something. Speed matters here. It's getting competitive, but there's still time to adjust.
It's a good quote. It's a good quote. And I also like the idea of getting the logic right in the middle and then playing at the front. I think there's probably not a lot of that, or not enough of that, certainly happening from the things that I see. Mark, to you, what's going to happen in 2022? What should the focus be? Where is the industry best placed to spend its time and thought and money?
Yeah, I would say I couldn't agree more with client centricity, both as an imperative and where I think firms are going to go. So it's both, and being design led, which I agree should be where firms go, but is not necessarily obvious. We have very high. We talked a lot about expectations. We all have very high expectations of apps that we use and entertainment, but we don't always have the same expectations of financial technology, the story about putting a beautiful car around a battery, not just serving up a battery, because that's the user interface, if you like. It's absolutely critical. So I couldn't agree with those principles more, Christine. I would say, what is the lesson for that? Well, if you're not 100% sure that your client experience is top notch, that should be the lowest. It's the lowest hanging fruit, but it should also be the highest priority, right? Because that's the thing that can kill you as a firm, especially if you're not able to not just actually understand your clients, but reflect back that you understand. And that's empathy, is reflecting back that you understand. And moving on from there to what the advisors, managers, RMs, bankers use, and the planning tools and on. But if you're not 100% sure that's good, that investment should be made to start, at least.
Fantastic. And arguably the investment there is perhaps cheaper, lighter touch, quicker than some of the other things that they may wish to tackle.
Precisely. It is high import, high impact to the business, to every business. I mean, every business needs their clients. Otherwise, they're not going to be a business. And to your point, it doesn't require heart surgery of, changing a core banking platform.
Ian, to you. So we're perhaps picking up on what Christine and Mark said, or taking a slightly different angle. Where is the industry going? What's the focus in 2022, or where should the focus be in 2022?
Well, I think the focus in 2022 is probably around 4 areas. I think the first one is finding good or new growth. And I think that comes back to the discussion we've had about existing clients versus the new clients. So I think it's this ability to serve a broader range of clients, both new and traditional clients, and to develop both, not just one or the other, but to develop both for most players. I think the second thing is there's going to be much more of a focus on where to differentiate. I mean, I think it's been mentioned before, the industry is becoming much more competitive, and the opportunities to differentiate will lie in new areas. I mean, I think the first one is this evolution of the hybrid advisor backed up by technology. In the past, we've been at sort of 100% advisor face-to-face focused. With COVID, we moved completely the other way to remote. Well, it's probably the answer is somewhere in the middle, and the hybrid one would allow clients to get some kind of access to an individual, even if it's affluent or democratized wealth through a call center. So it's finding that right balance of the hybrid. And I don't think anybody quite knows what that balance is at the moment. They're all experimenting with it, and it will be different for different client segments. I think the third thing is to do intelligent change. So intelligent change, as we've talked about, is smaller, more modular approaches, short-term benefits. You free up efficiencies to further invest. So that modularization concept becomes much more important. And it goes back to what Mark was saying earlier. You don't have to now replace the core platform. You can decouple the front from the back, and you can evolve in a more modular way. And I think the fourth point is we're on this journey to becoming what I would call a more technology advantaged enterprise. And I think technology will increasingly allow us to gain competitive advantage as we unlock some of the benefits that we see from cloud, from AI, from data, and of course from blockchain, which might be a little bit farther out, and maybe also the metaverse. So I think those would be my 4 parts of the route map going forward. And you know, the most important thing is not to try and be all things to all people, but to be very focused. And the technology allows you now to be even more focused in the sense of personalizing for particular client segments. Fantastic.
Well, we've hit the hour. That was hugely insightful. I think we could go on and on and on, particularly when we think about the metaverse, right? That's one I was expecting, and I no doubt will open up a whole area of opportunity, or at least change. So Christine, Mark, Ian, thank you very much. Much appreciated, hugely insightful. For those listening in, the session has been recorded and will be available. We will be putting out a write-up on it and pulling out different elements to highlight much of what was said. So again, I think it's time, well, as we're getting near to Christmas, I wish you all a happy Christmas, good new year, and well, as we discussed, let's look forward to 2022. So again, Christine, Ian, Mark, thank you for your time, much appreciated, and to everyone, goodbye and happy Christmas.
Thank you.
Thank you, everybody.
Thank you.
Bye-bye.
Thank you. Stay healthy. Bye-bye. Thank you.